All right. Well, it is a great pleasure to rejoin this wonderful event. One day and 1 year, I will absolutely make it in person. And if ever I was going to do it, tonight would have been the night here in Washington, D.C. So I'm Dante Disparte. I'm the Chief Strategy Officer and Head of Global Policy at Circle, no stranger to this virtual stage. And tonight I get to ask the questions and be the interrogator, if you will, of my good friend, Michael Gronager, who is the CEO and co-founder of Chainalysis, one of the world's leading cryptocurrency data companies and integrity companies. So Michael, welcome to the virtual stage. I hope you're well.
Thank you so much. And again, I like to second what you just said. It is a great pleasure to be part of this conference. I always hope to be there in person as well, but this time I'm joining from New York, where the sun is slowly setting.
Well, I should say go often to my dear friend. Both of us, we share a common thread to Denmark, me by way of being imported to the country and you by birth. Michael, today's conversation actually is a very important topic and one that is obviously very close to home for you and for the great team that you lead at Chainalysis. And it is a conversation around decoding the current state of crypto crime. And our industry, just to set the stage, is oftentimes, whether we're the victims of hype or the victims of a media cycle, all too often cryptocurrencies tend to get blamed for all of the world's problems, from ransomware to child trafficking to terrorist financing and everything in between. And as operators in the industry and people who believe in the promise of this technology and these innovations, how do we defend that scorecard? And so part of what we're trying to discuss tonight, and frankly, there's no better person in the world to do it with, is the actual current state of crypto crime. So as a scene setter, Michael, I'd love to get your initial perspectives on that question. And so what's the state of play?
Yeah, so I think one of the things that crypto is a victim of is transparency. So honestly, one of the things, if you look at the state of the world, if you look at crime, there'll be a lot of studies by United Nations, by OECDs, by nation states, and so on, trying to assess sizes of crime in various ways. It's super complex, and they're always like looked at with some skepticism. Sometimes they'll multiply by 10 just to assume that they get it right, because you know that there's more crime going on than the one you prosecute. It's extremely hard to assess. The interesting thing about the crypto economy is that everything is public. You can literally find every single transaction and they're all there. And with the emergence of, I would say, advanced machine learning algorithms, the ability to look at that data and infer more data from that, it's been possible to get a much more precise and nuanced view of how the economy actually is working. And I actually think, and I'm a firm believer, that the crypto economy today, because it's been so ingrained in what we are doing and actually have grown a lot, largely to the stablecoin growth as well, but we come back to that later. But it's grown so much. So I think it reflects pretty well what happens in the world, to be honest. So I think this is just the most transparent economy we're looking at. And we happen to see what actually is under the hood of the economy through that. So I'm starting to think much more about like crypto as being a very good monitor for how much crime that actually happens in the world, and probably also the best avenue to solve some of that.
It's a good question. I mean, a good way of framing of the question is sort of maybe an analogy, right? Is that are more people armed with smartphones documenting more events, or are there generally more events? And so like when we talk about, crime in cities, more people can document that because they're equipped with smartphones, but there isn't necessarily an increase in the incidence of illicit activity necessarily.
Absolutely agree with that. And again, we had an emergence of CCTV cameras everywhere. So we are being monitored way more than we ever have been. And of course, that will reveal crime. But also, again, the fact that transparency, like that analogy of the panopticon, as soon as you are monitored and people know about that and get an awareness about it, you will actually start to behave. And I think that's something that will deter people in the long run from not just using crypto for criminal activity, but basically deter them from criminal activity, because it is way more monitored than any other like way of transacting. Cash is number one, right? It's much easier to do anything bad with cash because no one will find it, and no one even writes down the serial numbers.
Yeah. Well, it's funny. I mean, the old expression after the 2008 financial crisis, cash is king. Well, it turns out that you're not wrong that when it comes to illicit activity, cash is also king. In fact, I was at a conference not long ago with the Bank for International Settlements. And if you were going to propose an innovation called cash, you might not likely get it authorized by regulators because of opacity, the likelihood of spreading diseases, and frankly, its use cases for illicit activity. But at the same time, end users should have an expectation of privacy. So I'd be curious, just given the world that you're living in, where you're absolutely right, blockchain-based financial services are inheriting this property of transparency, discoverability, and frankly, cryptocurrencies leave behind digital breadcrumbs that have enabled a company like yours and the entire industry of crypto forensics to blossom.
I would agree with that. It's definitely something that is there now. If you touch upon the question of privacy is something that's extremely dear to me. I think what it often happens is that it gets conflated with anonymity. And you would say that, like, if you ask for anonymity in transactions, I actually don't have a lot of sympathy anymore, because we never used anonymity in transactions. We never had like a request for that. It's not something that we historically ever had like a good history around. And I would say privacy, on the other hand, we actually solved that problem for the last more than 100 years through institutions. So my bank know what I'm doing, but that doesn't mean the government knows what I'm doing. They can figure it out if they have due cause to basically ask a bank what I'm doing. They would send a subpoena doing other things. And in crypto, it works very much the same way. And what you'll probably hear me say quite often is that crypto will look like TradFi, started to look like TradFi faster than TradFi looks like crypto. So I would say what happens in the crypto space is that, like, if I want privacy, I open my account on Coinbase. It's pretty simple. Then I have perfect financial privacy. I can send my funds to the account. I can send funds from that account to a DeFi pool, to something else. And no one can front run my trades, because every transaction will be different. They can just see that someone from Coinbase is sending funds, but they have no chance of figuring out who it is from Coinbase. Coinbase will know that, which is great because that provides the oversight capability that we want. But the privacy thing is fully and completely solved through institutions. And at the same time, the oversight thing. So I'm actually a huge proponent of privacy. I would say that anonymity piece that's sometimes requested through mixers and other obfuscation services, again, I don't see a real like use case for that, because it's actually solved elsewhere. It's fun from a technology point of view. I can see that, but it's maybe less useful.
Yeah. No, and of course you're bringing up really important topics, which is, not only the presumption of privacy and how it can be preserved in these technologies, but also the fact that law enforcement, financial crime compliance, and combating illicit finance has gained exponentially. And just as a couple of data points that are I would love your perspective on. In 2022, the estimated total value of illicit activity in crypto was around $40 billion. And when you look at the last year in 2023, the number was almost half to 24 billion. It's still a large number. I never get into the game of false equivalency, so we won't compare this to the so-called real economy or to banking or to other sectors. But I would just be interested in your perspective on what is driving that decline in total value of crypto crime.
I think there's two sides to that thing. So one of the things is like the crypto economy slowed down. From the entire crypto economy simply slowed down from 2022 and down to and up to last year. So we saw less movement. We saw the prices were declining prices and so on. So clearly that's been a driver of it. The other thing that's been a driver is that we definitely seen that many of the players, including the biggest players, have become far more compliance forward. They definitely see that compliance is a core part of running a business. So there has been a lot of cleanup. And you've seen more often than not announcements from some of the biggest exchanges in the world announcing that they work with law enforcement to solve this case, to crack down on this thing, to seize these funds, to do this and that. They're actually bragging about it. And I think that's strong, because you rarely see that from the traditional financial industry, that a bank would go out and say that they work with law enforcement to solve this crime and seize this amount of funds. They kind of keep that hidden. So I think that we are seeing a really good and strong effort from industry players to help mitigate these problems. And that's helping a lot. I think another thing that we have seen is that we've seen a lot of seizures. We also seen sanctions actually working to some extent, where some of the sanction sites have shut down. We've also seen some of them flourish from sanctions. That's especially Garantex in Russia that's been growing from that. But all in all, I think that's those different factors have brought down the absolute number of illicit activity.
It's interesting because that trend of downward decline in illicit activity, or at least the total value of illicit activity, in some respects also corresponds with this bull market environment where you're seeing really two trends playing out side by side. I call it the billions to trillions trend. Pathways to supporting billions of end users with digital assets and digital wallets and blockchain finance, but also you see this unlock of institutional participation, tokenized money market funds, Bitcoin, electronic trading, activities, the prospects of Ethereum being added to that mix here in the US. And then, frankly, rules around the world that are enabling more and more institutional players to leverage digital assets and crypto. Is that a positive in your view? And is it correlated somehow to this decline of illicit activity and maybe the public narrative changing a little bit?
I think it is definitely a positive trend as I see it. I think the growth and the bull market we are seeing, or the emerging bull market we are seeing today, is largely driven by institutional investors. It's the big institutions that are entering the crypto space. I would also say again that if you think about crypto, if you ask an average person, they would say it's about Bitcoin, it's Ethereum, they might say Dogecoin, they might say other things there. But actually today, more than 70% of all volume in dollars, like measured in actual value, moved on blockchains. And all the blockchains out there is stablecoins. So it's dollar nominated. So we basically have a dollarized infrastructure, and we have created new rails for traditional finance, where we're actually moving dollars around with the speed of light and doing very, very fast settlements, cross-border, everywhere, which is super strong. So I would say, again, this is an institutional play. It's basically helping companies settle their trade contracts, doing everything across the globe. So I'm seeing that institutional move. The ETFs is definitely also an institutional move. It's, again, crypto looking like TradFi and not the other way around.
It's interesting, all this time we were thinking we were developing this kind of anti-establishment product and innovation that would make Wall Street irrelevant and the banks irrelevant, but it turns out convergence and not disruption is the outcome. And then yet, again, I can't help escape, and maybe it's the mood here in Washington, Michael, I can't help but escape the narrative, frankly, among many policymakers, regulators, and certainly many corners of the media, is that crypto and crypto crime are often treated as the scapegoat for a whole host of things. And frankly, anywhere bad actors can co-opt a system, of course, good actors should reject that. But what do you think is missing, be it in the public narrative, be it in sort of broader industry and market education and advocacy? What is the missing link to make sure that the narrative at least gets right?
I think the missing link is actually understanding that transparency is both the biggest benefit and also the Achilles heels of crypto. Because the fact that we can show and report numbers with pretty high precision on criminal activity is an Achilles heel, but it's also a huge advantage. And it's only the second that policymakers understand that this is actually the advantage, because now we have something we can measure and improve, apart from having something we can't measure, hence we can't improve it. This is a very strong thing. That's actually the real advantage. I think the other thing that's kind of hidden in a lot of the conversations is that I mentioned that before, that the blockchain has been dollarized. And I think that this is creating access to dollars all over the globe. And it's enabling an economy and global economy that is more and more where the dollar has been threatened, the hegemony of the dollar has been threatened. And I think this is actually moving in the right direction. So this is how the US ensures that dollars is still strong, also in this century. And I think this is like something that's also have largely been neglected by policymakers, that the blockchain is I would almost say today, I know it's an international conference, but I would almost say that the blockchain is American.
Well, I mean, of course, I have a small bias having uploaded the US dollar onto the internet myself and here at Circle.
I know you did, yeah.
So I think first of all, thank you for the commentary there. I do appreciate those remarks. And I guess maybe switching gears, one of your very important, not only customer counterparts at Chainalysis, but critical stakeholders are governments, law enforcement agencies, and sort of the regulatory bodies. And frankly, I've always been telling other policymakers, central banks, and others that they could learn a lot from how the financial crime compliance bodies like Financial Action Task Force and others have started harmonizing rules for crypto. As someone who deals heavily with this particular regulatory counterpart and law enforcement counterpart, what are you hearing from them in terms of either harmonization of rules and policy making, areas of opportunity, areas of broader collaboration, frankly, in the industry? So what's top of mind for that stakeholder?
I would say if we start with anyone from like various government agencies like law enforcement to intelligence agencies and so on. We have around 300 public sector institutions in around 40 to 50 countries in the world today. So truly global. They're basically using the same data set. They're many times collaborating on solving the same cases because they involve international crime syndicates. And they're using the same platform to do that. That's the Chainalysis platform. And what we see between, I would say, a lot of the leading law enforcement agencies is that there's a huge level of collaboration, and they largely celebrate the transparency of the blockchain. They have solved some of the biggest cases. Some of the biggest seizures of funds ever have happened and been enabled through crypto. And we never seen that in traditional finance. It's not normal that you seize $1 billion. $1 billion is a big number, and sometimes we see multiple $1 billion, and that's not common to do that, but that's been possible and enabled through crypto. So we definitely seen that happening. I think where the difference is that sometimes to enable law enforcement and intelligence agencies to feed that information into policymakers that they actually need this, we often see a clash. We often see that like policymakers want to continue the narrative that crypto is bad and are largely surprised when they hear some of their own agencies telling them that this is actually good. This is actually better than anything they've seen before, and it actually enables them to do their job more than anything else. So I think that's typically where the schism is. And yes, of course, companies like yours, companies like mine, a lot of other interested players will repeat what I'm saying and saying like, hey, this is actually good. But I think what really matters is to hear people from government institutions telling this to policymakers that this actually helps them do their job better than they could before. And I think that's the strong piece, and that's what we need. That like message needs to be amplified further.
Yeah, no, I totally agree. And I was going to ask you, sort of maybe a further question in this category of looking forward, that if you had a crystal ball, and in some respects you do with the power of the Chainalysis platform, and you could sort of fast forward a few years from today, not only what has to get right to kind of do the unlock that we were discussing earlier, both the billions of end users that can be supported by these products, the very nature of these products is that they don't necessarily respect borders, but we can ensure that they always respect laws. And at the same time, then you see this institutional wave. 3 years from today and then 5 years from today, looking into the Chainalysis kind of crystal ball, what do you see as kind of critical unlocks that the audience today can hear from you on, and then we could chat 3 and 5 years later to see if your predictions were right?
I'm pretty sure you'll take notes, so let's see if I get this right. But I usually say that from 2 to 5 years, that's usually what I would say. That like in that time frame, so that includes both of them. I think what we will see is that stable coins will continue to grow. They'll continue to take up more and more market, and there'll be a settlement mechanism that will be used by not banks, potentially banks in Asia. That will be a little bit more forthcoming on that side. But I think that we will actually see first payment processors, credit card processors accept settlements and play with settlements in stablecoins between various of their partners. Then we will see the first banks starting to accept deposit and withdrawals in stablecoins. There'll probably be some consortium players. There'll be some someone maybe working with you, maybe they create their own stable coin, maybe they do other things, because it's kind of interesting to hold treasuries when the rate is above 5%. So some of them will try to do that as well. But you will definitely see this as being a mechanism where banks can accept stable coins as deposit and withdrawals. That will speed up there. It's just like you go into your bank account and you have this button called Selly when you are in the US. And that has become like the de facto thing. So if you pay your plumber, you use Selly to pay your plumber with, and that just works. But going forward, instead of sending a wire, you will send it using stablecoins. And that'll be another mechanism. And suddenly stablecoins has become part of that. So I see that unlock will happen where globally people will start to accept stablecoins as through their institutions. Yes, someone will hold them in their personal wallet as well. But to be honest, I think that will largely be an institutional play where we will see more and more transactions flowing between traditional financial institutions in stablecoins. And I think that will be the huge unlock of crypto. Some of this requires some regulatory changes, but honestly, you know that as long as there's momentum, the regulation usually follows in the end.
Yeah, no, I agree with that. And I guess a question is, one of the things that's interesting about our industry is obviously this notion of constantly upgradable infrastructure, right? If you think of public blockchains as public infrastructure, that unlike traditional payment systems that are closed or proprietary to single companies, blockchains have this advantage of being financial shareware. But at the same time, there's such a great proliferation of blockchains and wallet providers. Does that make the job of a Chainalysis harder to sort of peer through where the activity might be occurring? Or do you feel like, you know, from a company vantage point, the ability for you to continue proverbially following the money despite the chain, despite the wallet, despite the exchange that it might ride on, and then not to mention the sort of DeFi protocols, do you feel like your work gets harder the more the industry continues to evolve and iterate?
Yeah, but it's like we always say it moves fast, right? But now we've been around for 10 years and some things has happened. And yes, there's a lot of things that happened in 10 years, but still we had 10 years to solve some of the problems. So what I look at is like the first thing we wanted to do was like we looked at one blockchain. There was only one blockchain around when we started. It was Bitcoin, and well, there was a few other ones like Litecoin and others, but they were basically clones. So it was pretty easy, but still it was challenging because the amount of data at that time was huge, and you wanted to be up to speed basically with the latest stuff in the mempool all the time. So those were the challenges back then. Then the next challenges were that like we got new blockchains. So we had to take like one by one of these new blockchains until a point where we realized that this is not the game. We actually need to support all of it. So we created like a rationale early last year. We basically say every chain, every interaction, we are doing it all. So we basically build abstraction layers and basically say from solving one or two blockchains to say now we have an infrastructure where we trivially can plug in certain types of blockchains until the point where we can plug every blockchain in there. Today, for example, if you launch a new token on Ethereum or any other EVM chain, also Solana for that matter, then within 20 seconds, it's supported in our products. It's all an automated pipeline. And we'll do the same with new chains. When you get layer ones and layer twos, side chains, and so on, you basically automate those layers. It's a huge lift to do that, but I also think that that's the only way you can future-proof your platform and follow the things. I do believe long-term you will see some convergence on what blockchains are being used, but right now we don't live in the convergent age. We live in the world of proliferation of blockchains, and I think the only way to solve that is just like build abstraction layers in your stack that enables you to solve all of these things extremely fast.
Yeah, I mean, it reminds me of the expression in a gold rush, don't dig for gold, sell shovels and pickaxes and sell the utility.
Exactly.
And it seems like that's exactly what you and your colleagues at Chainalysis have built, is a utility that works across the ecosystem. I mean, a conversation with you and a conversation about crypto crime would be incomplete if we didn't also discuss the anonymizing software platforms. That an example, the very famous example, but it's not the only one, of course, was Tornado Cash, in which the US Treasury Department and the Office of Foreign Asset Controls sanctioned the protocol itself. And to some technologists, this was a line too far, but to interest in the national security community and in law enforcement, it was effectively, quote unquote, good technology being co-opted by bad actors, in this case, largely the North Korean nuclear money laundering sort of program. How do we continue maintaining that creativity of open source development in financial services and sort of incentivize that development, because there's some utility there that's hard to meet, while at the same time always ensuring that, you know, the rules of the world and the rules of money and the rules of the global economy, especially those that are about national security or global security, are always protected?
So I think there'll always be controversial uses and innovations in technology. If you go 10 years back, the controversy was probably a little bit more than 10 years, 10 to 12 years back, it was 3D printed guns. You can now download and you can print a gun and people can't trace it. And oh my God, this is so cool. And from a technology point of view, it's super cool and it's innovative and it's everything. But we also knew that that was kind of more to show that it could be done. And then it slowly died out because people realized that that was a use case of technology, 3D printing, that was not really what you wanted and was actually not the direction you wanted to take it. You'll probably see similar things where we will have equipment and printers that truly can create any kind of drug, any kind of legal and illegal drug. You just need to fill it with the right recipe. Again, now we have a problem. You can immediately create the most poisonous substances in the world from your desk. Is that a good idea? No, but we'll probably see someone showing that they can and saying it's cool until the point where no one thinks it's cool anymore and the technology gets like some level of guardrails around it. I think that the mixing technologies and anonymizing services are an example of that. The technology in itself is super cool and super impressive. The challenge around it is that it actually doesn't solve a problem. As I mentioned before, the problem that they are claiming to solve is being solved through institutions in the space. There is no need for an anonymity service, and it's not solving privacy, it's solving anonymity. And I think that that's basically the challenge here. I think it's cool. I do, from a technology point of view. But again, I see very little legitimate use cases of the service that you couldn't solve in a less dangerous way.
Well, it kind of gets to the reminder, I think, for all of us who are not only listening to your wise words, but who are attending today, that before we had the web that we now know and love, and that frankly is indispensable to any semblance of normal in the world, we had the dark web. And the very first use cases for the internet in its earliest days were questionable at best or outright illegal and bordered on copyright infringement. And I think the same message holds true with money. So with a few minutes left, Michael, you know, obviously we could have spent hours discussing, but with a few minutes left, would love to just get any final words from you for the audience, any sort of final commentary on the crypto crime world that you're working so avidly and fighting along with your colleagues at Chainalysis. But you know, any parting thoughts for the group?
Yeah, I think maybe the most important thing to consider right now is that I think that the fact that we've seen that crypto today has become pervasive. It's everywhere. If you look at any group of like 2 to 10 people, the likelihood that one of them is touching crypto is pretty high. And that also means that like crypto is becoming, and this is actually driven largely by stablecoins and companies like yours that like actually enables this to happen, because people like stuff that's denominated in a stable currency, not in crypto. So we see that growing. It also means that crypto is increasingly becoming a very good marker, or a very good like proxy for the real economy. That's great for a lot of things. It's great if you want to study the economy, you want to study like different countries and how they're using money and so on. But it's especially good if you want to solve international crime, because suddenly, and for the first time ever, you have the best lens into international crime syndicates, and you can now search, size the crime syndicates, understand the operation. They might operate in corridors from China to Thailand to Mexico and to the US, if you think about fentanyl trafficking. And doing those crime investigations in the past were extremely hard. And today, thanks to stablecoins and Chainalysis products, you can actually do this in a much simpler way. And we are seeing law enforcement picking that up. So I think that that's like the main takeaway for me, is that initially we were put on the globe to keep the blockchain safe, but now I feel that we are here to keep the world safe.
Here, here. Well, with those words, Michael, thank you again for spending part of your evening with me and our wonderful audience. And I'm grateful to our organizers, SCB, 10X, and Bloomberg, for the opportunity to have this conversation with a good friend. Thanks again.
Thank you so much. Enjoyed this. Any other time, I'll do it again.